This is the Situation Room, the only way to start your day.
We're going to now go into a very wide space, but a critical space when it comes into enterprises. We already know that in order to build robust economies, small and medium enterprises then must be the heartbeat. We're going to be looking into venture capital for African enterprises. Joining us in the studio in the hot seat is the head of the regional hub for East Africa at the European Investment Bank. Edward Klassen is here with us this morning. Good morning.
Thank you very much. Good morning.
Karibu sana. So we're looking into that conversation in a bit, but Dennis is going to take you to a different African country. So, imagine that you're there. Imagination is a wonderful thing. And I guess you'll give us more information.
So the country we are in is Sao Tome and Principe, right? So it is located in the Gulf of Guinea off the west coast of Central Africa near Equatorial Guinea. We're talking about a country, the population around 247,000. And its main export is cocoa. So if you're a lover of chocolate, perhaps you've had a piece of Sao Tome and Principe. But the proverb that we get from this country today, the sun rises for everyone. The sun rises for everyone. How would you interpret that?
Well, that's a beautiful proverb, and I think it's true. Some of the best things in life, like the sun, what the sun has to offer, is the same for everybody, whether you're poor or rich. So I think it's a beautiful proverb.
Mm-hmm. Well, yeah, cuts across. Regardless of where you fall in the stratosphere.
All right. Well, a great way to look at it, for sure. And as we get into this conversation, into the waves of it, let's do some definitions first of all. Venture capitalism, we hear it all the time. Enterprise and necessity for economy and across the board. Start with venture capitalism. What is this as an ism?
So venture capital is basically risk capital that you provide to private companies. Most of the time people talk about investments into companies. We're always talking about the larger companies that are listed on the stock exchange. But where did all these companies come from? They once, back in the day, were also small companies. And to start up your company, you generally start with either your own savings or with some money from friends and family. But those amounts are often quite limited. If you really want to grow your business, at some point you need to start raising money from venture capitalists. So venture capital in general is done by fund managers who go out with a certain strategy and kind of an idea of how they can make good returns by investing in startups. And with that idea, they go to investors, including us at the European Investment Bank. So they try to raise a fund targeting, as I said, certain countries, certain regions, certain sectors to then go and find the best opportunities. So that, in a nutshell, is venture capital. It's highly risky. It's generally aimed at companies that are not able to go to a bank yet, so they don't have revenues. They might not have the collateral. They're loss-making generally, but they have a great idea. And very often it's also businesses that have really the opportunity to scale up. So it's not your bread and butter small business on the corner of the street. It's people with game-changing ideas, big plans to make a real impact on the economy.
Okay.
Yet, when you look at Africa as a continent, 18% of the world's population gets between 1 to 2% of the global venture capital, which asks the question why and what must Africa do to bridge that gap?
Yeah, it's a very good point. Unfortunately, Africa is lacking, let's say, in getting money from abroad. This is, in my view, due to the risks that people perceive. Some of it is perceived risk. Some of it is maybe real risk. Maybe let me give you some examples. In Africa, it's not so easy to sell your product to other African markets. The infrastructure is not always in place, or maybe not at the level that it should be. Investors from abroad and businesses in general like predictable, stable government regulations, regulatory frameworks, transparent tax systems, and in those areas, I think Africa can still make some steps to improve. So this is, some of this is real risk, some of it is perceived risk. And to change this, to go up and make sure that Africa gets more of its fair share of capital, I think those areas need to be addressed. what Africa has to offer, and I think that's why it is a very interesting continent to look at. It has a very young population, well educated, very entrepreneurial. Certainly here in Kenya, so I think there's also a lot of upside. I don't want to just stress the downside. I think there's a lot of upside. There's a lot of possibilities, but it needs more capital to give the people the chance to set up their business.
Would this need a bedrock of government with systems in place then that would allow these kind of processes to then kick off?
So with the bedrock, you mean
systems working, because I can get the capital, can't I? As a business, if I present my case properly, I can get capital essentially to run things. But if I'm operating in country, then there's certain systems, systemic infrastructure that must be in place in order for me to run the business. Can it work if there's money coming in from here, wherever that fund may be, and then if we don't have the proper infrastructure needed to boost or to guide the business?
So I mean, there is venture capital in Africa, and there are, and certainly here in Kenya, there is there are of course very you have a well functioning government. But what I'm saying is, especially I think business environment, conducive business environment. In some parts of Africa could be improved. As I said, investors always look for predictable and stable outlook in terms of what will be the regulatory framework, what will be the policies, what is the taxation, but also maybe trade agreements between countries. That will all, if you compare Africa, for example, to Europe or to other parts of, there has been, we've had more time, but there's been more progress, let's say. So I think it would be helpful, and I think it would support more capital flowing into Africa if there are steps to be done there.
Okay. So there's the Boost Africa program. What is this?
So Boost Africa, let me take a step back. So Boost Africa, the European Union has a program called Global Gateway, which is to support economic and development ties with partner countries. And it very much has a strong focus on Africa. Under this Global Gateway initiative, there is a program called Invest in Young Businesses in Africa, IYBA. This is a 4.8 billion euro program targeting the whole of Africa. And as the name says, it is very much targeting, supporting startups and businesses in Africa. And under that program, we have a program called Boost Africa. Now, Boost Africa is specifically targeting venture capital, as you said. It's targeting innovation. It's targeting entrepreneurship. So how do we do it? Boost Africa has started in 2020. It is an initiative by us, the European Investment Bank, together with the African Development Bank, and supported by the European Commission. And we have now made investments in 6 funds, 6 venture capital funds that most of them are also based here in Nairobi. And they are now going out and support startups and entrepreneurs in the market.
Mm-hmm.
So what are some of the achievements that these Boost Africa has pretty much achieved so far? Because it has been meant to enable entrepreneurs to be able to get this funding. So what are the achievements? Because for others to jump up on it, something has to show.
Yes. So before I tell you about the achievements, maybe also I forgot one thing to mention. What is so specific about Boost Africa? What is so unique? I think Boost Africa has 2 sides that are pretty unique. One is we provide higher risk, let's say, risk capital, but we take more of the risk than the other investors into a fund. So we take what is called a junior tranche or subordinated tranche. What does it mean? It means we are de-risking the investment in venture capital for other investors. If there would be any losses, we are the funds to take them. So this, of course, makes it much more attractive for others to come into these funds. And as I said, one of the reasons venture capital is lacking in Africa is the perceived risk. So if we can take that away, it of course makes it more attractive. That's one of the aspects. The other aspect is we are also providing grants and technical assistance. So this is money for entrepreneurs to learn how to set up a business, to learn how to set up a proper governance of your company, how to do the reporting, how to network, how to expand your product. So really, let's say how to be more successful at running a business. Now, to come back to your question, The results so far have been very, very encouraging. We have already created and sustained more than 15,000 jobs, and these are generally high-quality jobs for, in very interesting sectors. We have put 78 million euros into these funds, and they, on the back of that, and given that we have taken more of the risk, that has attracted 382 million euros from other investors. And more than 70 companies have already been supported. Very interesting companies like Power Internet here in Kenya, making internet available in underserved areas. Shamba Pride, connecting 80,000 farmers across the country to tech platforms to be able to run their business better. Turaco Insurance, for people many people in Kenya make their money off their mobile, and they are with their insurance product are helping this. So it's really. It has a significant impact on innovation, on job creation, on giving people a chance to grow their business. We're very happy with the results so far. And the program hasn't finished yet. So even though we have invested in 6 funds, these 6 funds are still continuing to invest in the market. So we expected another 50 companies at least to benefit from this program. And it will take another 1 or 2 years at least for the program to be fully invested, so people can still benefit from the current program.
I mean, tech and innovation is such a buzzword globally. That's what everybody's talking about, from business to governance. Companies are evolving and adopting innovation. We are talking about artificial intelligence today, and so many things are changing. But looking at this 15,000 that you are earlier talking about in terms of jobs, and looking at the portfolio then in terms of the sectors that you're attracting, what are like the top 3 or the top 4, the top 5 sectors?
So we don't prescribe. So the way the model works is we invest in the funds that we believe have the best opportunity to find the best companies. And of course, we agree which sectors, which countries they go to. But we leave it up to the local people, the local fund managers based here in Nairobi and based across Africa to find those best opportunities. We believe that's the best model. So they would be much better at finding those opportunities, understanding the local content than we would be from abroad. But let's say the sectors that we see the most potential currently and very interesting opportunities are sectors like digital connectivity, fintechs, climate solutions. But we also have, we've seen good opportunities in healthcare. So it's, I wouldn't want to pick one sector. You're often surprised when you are in the investment. When I look back on making investments, sometimes the most interesting opportunities are coming from a sector you expect the least. So I think anything is possible I
expected manufacturing, for example.
Manufacturing is, yes. No, it's also a sector that the Boost program is focusing on.
Okay.
So even as you look at, and it just, if you said that there are a number of fund managers, but at the same time, there are a number of businesses that have been supported to do what it is that they do, whether agriculture, technology, and all of this across board. So who then, and how then, is this found? I mean, it sounds like such a rudimentary question, but how the entrepreneur who is sitting saying, I need to be able to get from here to here, because that's when we're really going to see the thing doing what it does. How do they find such? How do they know that it exists in the first place?
Yeah, good question. I mean, I think, the entrepreneurs in Kenya, let's say, if we focus on Kenya for a moment, they will know the venture capital funds that are active here. I mean, they don't necessarily have to know us because they don't have to talk directly to us. As I said, we invest in local fund managers. They then go and find the opportunities. So there is, of course, already a very vibrant venture capital segment here in Kenya. It's still, we are trying to make it bigger and more liquid and with our products. But so these entrepreneurs, I'm sure, like if I give you some names of the fund managers we've supported, like Seedstars, like Africa Invest, like TLCom, Django, Atlantica, and Partech. I mean, most of these funds are either present here, have offices here, and they go to all the networking events, to the industry events. So I think these entrepreneurs, once they have already built a small company, maybe with their own savings, they will know how to reach out to these venture capital lists. If not, I mean, we do have a website at the EIB, and on our website you have a page to Boost Africa, and there are contact details also for you to be put in touch with the right fund managers.
You know, most of the time, fine, I've accessed the funds that I need for my business to grow, and I'm just looking at after the fact now there is access to the market, because at the end of the day, we all get into business to make money and to grow, right? So here's a question where EIB has come, European Commission is behind it. But assuming I'm in the agriculture sector, I want to access the European market. Does the partnership or working together with EIB open doors for that? Do you guide these entrepreneurs on how to access these markets, perhaps?
I wish we could, but no, I wouldn't say we do this directly. But talking about agriculture, and one of the companies that we have supported through this program is Shamba Pride. Clearly, you know, we are in regular contact with that company and other companies. So if they have any specific questions, of course, we can on a case-by-case basis help them. But I think what the program helps is that these companies are becoming bigger and better and more profitable. And if they have, and they're growing their staff, so of course that will also enable them to have somebody looking into how to do this. We have the European delegation here as well, able to support with help companies open up to the European market and vice versa from Europe to here. So I would say there are possibilities, but it will be too difficult to support each and every company individually. We have here in Nairobi, we have an office here now for 20 years, but we have 25 people, mainly Kenyan nationals, but we are not able to.
How do you divide between the European Investment Bank's mandate and the mandate of countries to reach specific economic, goals by a certain time? Most countries have vision plans, 2030, add 25 years to that, etc., etc. Is it just the European Investment Bank doing or fulfilling a mandate where they're saying some of these funds that are available, let's see how we can use them somewhere else? Or is it in partnership with countries who have a specific economic mandate to fulfill a certain thing by a certain time?
Let me maybe take a step back and introduce a little bit what the European Investment Bank has done in Africa and in Kenya. So we've been investing in Africa since the 1960s, so for a very long time. We did our first project in Kenya in 1977. And over the last decades, we've invested more than 1.8 billion euros into Kenya, into more than 70 different projects. We support both the public sector and the private sector, and more than 700 million out of that 1.8 billion has gone to the private sector. So more than 40% of our financing goes to supporting the private sector. So we've been here for a long time. We've been very active. Maybe to give you some example of the public sector projects that are very visible maybe in the market as well. We are currently financing the expansion of the road between Mombasa and Mariakani. In Kisumu, we have a water purification and sewerage project. We have been long-standing partners of the geothermal expansion, the geothermal plants in Olkaria with Kengen, and I could name a few others also. We can get to that later if you want. In terms of your question specifically, yes, it's not only what we want to do in Europe and then force it on here. We definitely work with our partner countries. Kenya is a key partner. We look at what the Kenyan government wants. So what are the projects they would like to achieve, and what are the milestones they have and the goals they have. And then we check if that fits with EU policy. So if it's in a sector that the EU wants to support, let's say digital, let's say climate, renewable energy, many sectors, water, we then try and find a good way to work together and finance a certain project. So I think it's very much together with our partner countries.
I mean, if you talk about Boost Africa, beyond access to capital, and you're looking at somebody doing a business, and they want to have a relationship. So beyond the money that they're getting to start or to expand, for in that case, how do you build long-term prosperity with this person? How do you walk then with these individuals, not just funding, but ensuring that they're raising their productivity and they're achieving their goals.
Yes, that's very important. I mean, the program is more than money alone. As I said, there is also a grant facility connected to it. It's a €2 million grant facility that is focused on capacity building, technical assistance, and as I said earlier, really focused on how helping these entrepreneurs, how to set up a business, how to run a business, and how to be more successful, hopefully. But what is very important in the venture capital industry in general is not so much what we do as an investor, it is what the fund manager does. So the Seed Stars, the Africa Invests, the TLComs of the world, they generally take a big equity stake in these companies, and they will be very involved in supporting these companies how to grow. So they take a board seat, and venture capitalists in general have a very wide experience within their team. They have the networks, they have the understanding of the sector, they either have been entrepreneurs themselves or are very well connected to people who know the sectors very well. So they are very much there to support entrepreneurs and put them in contact with the relevant people, maybe with government, maybe with how to launch a new product, maybe how to go to another country. So the support system a venture capitalist gives is much more than just money. It is really helping with strategic decisions, with maybe how to be more efficient, as you say, or maybe how to make sure you have an excellent corporate governance, which is very important. All those type of things they can help with. So it's money and a lot of support and a lot of guidance and opening up the network that they have.
I think about the sustainability aspect of a lot of these businesses, or for entrepreneurs who will get into business and then get the much needed access credit. As you know, one of the reasons why businesses or the economy will not grow to an extent that we want it to is because these businesses, these MSMEs that would essentially receive this money, the access to credit is one of the largest, one of the biggest, hurdles, exactly. What's the assurance, or what's the work that's being done to ensure that these businesses have longevity, are sustainable over time? A couple of years ago, some of really bright star businesses shut down in Kenya because of many reasons. But what's to ensure that they go through the cycle of a business and keep going towards developed cycles of businesses?
Well, to maybe disappoint you, assurances there are none. Venture capital is a high-risk game. We should not forget that. So the way it works, a venture capital firm is clearly interested in trying to back the best firms, because only if the venture capital firm is able to return the money, and on top of it a very nice return, will that firm be able to raise another fund in the future. So they're very much incentivized to look for the best, the most profitable opportunities. And the way it works in venture capital as well is they don't invest in one or two companies. A fund will invest in probably around 15 to 20 companies in general. So it's true that even though at the time of investment they have a strong belief that all these 15 or 20 companies will be the next superstars, the reality is that some of them will not make it. That has to be compensated by hopefully some others in the same portfolio that are doing extraordinarily well and make up for the losses. Clearly, the ones that make it are the ones that will grow fast, that will provide a lot of job opportunities for other people, and provide tax revenues down the line as well for the government. So it's a real positive impact for the economy in terms of job creation, in terms of tax revenues, and just in terms of growing the economy and providing opportunities. And the venture capitalists will also be very, very incentivized to make sure that the companies, the ones that are promising, are getting their full support. So they will be looking to make sure they don't fall off the cliff or miss or take the wrong decisions. But I mean, to come back to my first statement, there is no guarantee. Some very promising companies will also fail. I mean, that's the nature of startups all over the world. It has nothing to do with Kenya. That happens everywhere. I mean, it's a high-risk game, and that's one of the reasons we provide this junior tranche to, again, take away some of the risk and make it more attractive for the private sector and other public sector investors to come into these funds.
I mean, you speak about prosperity and all these businesses are growing in the long term, but it is also a high risk game as well. So, what are some of the gaps that you've seen as EIB, and perhaps how then do you get into giving these funds, knowing of these risks, and helping entrepreneurs to address these risks so that their businesses do not go down in the long run?
Yeah, it's two things again. So we have our grant element, our technical assistance element, that is part of Boost Africa, and this is open to the fund managers, but also to the entrepreneurs. So the entrepreneur directly can benefit from this program by getting grant money to focus on certain areas. But also the venture capitalist itself, as I explained, is very much involved in not running the company. I mean, the CEO of the company will run the company. But if you get a venture capitalist on board, I mean, there are different models. They're not all the same. But in general, a venture capitalist is quite an active part of let's say, management, at least of the board, where they, on a monthly basis, would steer and help and guide the company to take the right decisions, to remain efficient, to maybe be aware of competitive threats, or to show opportunities, and to help them open a network. Very often an entrepreneur has a great idea, but might not know everybody in Kenya or Nairobi or in Mombasa or wherever he is setting up his business. He might not know everyone that he needs to know to be successful. Venture capitalists have a history and a track record of and have a bigger team to be able to open those doors for them. And I mean that's the model that it should that hopefully increases the probability that these companies are successful. That's what I would.
How's the trajectory like when you started and now? Do you see more businesses in Kenya jumping on these facilities that are available? And if not, then how do we ensure that most businesses get on it?
Yeah, I think the venture capital. I mean, venture capital is not new in Kenya. I'm not. So it has been around. I mean, Kenya is one of the hubs in Africa. The economy is very open. The private sector in Kenya is very strong, very dynamic. There's a lot of entrepreneurs that have great ideas. The population is highly educated, English speaking. I mean, there's a lot going for Kenya. So venture capital has been around for a long time. We at the bank have invested in 178 funds in Africa, more than 3.2 billion euros over the last decades. So we started actually investing in venture capital in the 90s. So that shows in Africa. So it's been around for a long time. What we're trying to do with this program is to grow the venture capital market further, to make it more liquid, to provide more capital. There's no lack of ideas. There's no lack of opportunity. There is a lack of capital. And we as public sector investors can also not. We can also not do it on our own. What we need to do is attract other investors, private sector investors in general, to provide this liquidity. What I would love to see in Africa and also in Kenya is actually seeing, you have very big companies here in Kenya, certainly here, pension funds, insurance companies, asset managers, and they put very little money at work in risk capital. They like to do much more risk averse or safer investments, and that's very different in other parts of the world. So if we could find ways, and we hope that Boost Africa is one of those ways, to attract those big money managers, basically, to put some of their money, even if it's 1% of what they manage, that would already make a huge difference. In terms of, do we see an increase in people approaching venture capitalists? Yes, it is growing. It is a growing market. I think, and it will continue to grow. But I would love to see it grow faster. And we need. I mean, if you look at statistics in Kenya, every year 1 million youth enters the job market. I understand only 200,000 people of them find a formal job. That leaves 800,000 people to fight for themselves. If some of these people could start their own business, or many of these people could start their own business, and hopefully create jobs for others by setting up a successful company, I think it would be very positive. So this program is also aiming to support that. Of course, in a small way, but...
In noticing where insurance companies or pension funds who have this, largesse in terms of funds that are available, of course you've noticed that because there's some kind of study that has been done. Why do you think then that they're risk averse? If they, what has come to your mind?
Well, I think the positive explanation could be that they just don't know about the industry. Mm-hmm. It's new. It's maybe they're not fully aware. That could be one explanation. But I think another explanation is that it is seen as I said, as risky. Mm-hmm. As you said, there's always stories about companies going bankrupt. So people might think, "Oh, I could lose my money." Mm. And whilst there are no guarantees, I think if you invest in a fund, and certainly if you invest in more funds, you spread your risk not into one or two companies. You spread it over tens of companies, potentially hundreds of companies. We've been investing in tens of thousands of companies across the world. We are investors all over the world. And if you then look at a portfolio level, you will make a return, a positive return. So you're not only supporting, you're not only doing good for your own company, for your own country, for your own entrepreneurs, but you're actually also making a return. So I think some education needs to be done, or some, let's say, familiarization for these big money managers in Kenya to let's say get acquainted with the sector, because I think the risks are more perceived than that they are real. And if you look at South Africa, for example, in South Africa there's plenty of big companies investing in private equity and in venture capital. In fact, some South African companies are investing also in funds based in Kenya. Mm. So I think, and in Europe and in the US and in Asia, this is happening all the time. So I think it's a process. And again, I hope that Boost Africa can make a little dent in that by showing that the risk is not as high as it is, and even if there is some risk, we are taking any of the first losses. So yeah, I think it's a process. It's familiarization, and it would also be great, as I said earlier. Maybe some government incentives would be good. Even in Europe, that's what we've done to incentivize money managers to look into your own economy and your own startups, because it might be easier for a pension fund to say, you know what, I'll buy a big infrastructure bond issued by the government, or I'll buy something which looks very safe. But yeah, that doesn't necessarily support your own thriving private sector.
What would some of these incentives look like? For example, if we were playing in that place where, all right, because I see what you mean is that in terms of possible capital floating around that could essentially, be part of these venture capital funds, then one would say, okay, so what does it do for me? And that's, I think, connected to the question I asked earlier, that in terms of government infrastructure, in terms of spaces where things like that would happen, if the government sees the need or understands the need to have capital available to entrepreneurs, then you can give incentives to some of these pension funds. You see what I'm saying? I can see the connection. What would such an incentive look like?
Well, there's many different ways, many different options. One is the route we're choosing, which is to go for, let's say, we're taking away some of the risk by investing in a junior tranche or a subordinated tranche. So that could be a way the government could set up its own investment vehicle. The government could maybe give tax breaks if you put some of your money into this part of the economy. Mm-hmm. I also would go back to my initial statement that I think just being very transparent, having a stable, predictable regulatory framework, and so people know what will be the policy for the next few years, and stick to it. Be transparent in how the rules are applied. Mm-hmm. And again, this is not only Kenya. This is a worldwide thing. This is by being more predictable, more stable, you will attract more capital. Mm-hmm. And there are many other ways that you could think of, but it's really up to the government in each country what works best for their in their country.
What makes Africa, because in your earlier statement you talked about this perceived risk when we talk about Africa as a continent and versus the real risk. You look at African countries and you compare them to other countries and other continents. What is it that you you feel is the perceived risk when people have not landed here? Because we've had cases where people assume that this is how Kenya is, this is how Africa is, it's a bad place to go and invest, until they come and they see things are different. You said you've been here for two and a half years, and you're loving it here, but you must have had a perceived idea before coming. But when it comes to investment, what is it that then makes Africa appear that way in the minds and in the plans of investors?
Yeah, it's a good question. As I said, I mean, some of the risks I think are perceived. Some of the risks are real, or let's say some of the drawbacks are still there could be improvements made. I think it's. I mean, it's not an easy question to answer, but when we look at if we look at our portfolio, it's performing better than you would think, and also. So one of the aspects is that, as I said, if you spread your risk across many companies, it's okay if some companies don't make it, as long as it's being made up by the well-performing companies. And this is, I think, what the opportunities in Africa are huge. So some of our outliers are also doing very, very well. If people have found a way to offer a product or a service which is very needed in the market, we see fast growth in these companies. So by investing in a number of companies, you can, on balance, have a well-performing portfolio. So that's where I think if you just listen to the one or two companies that go bankrupt, or where maybe there has been some negativity, that maybe blurs the picture of how the whole segment and the whole sector works. So I think that is one thing that you will only realize if you are investing in a market and be exposed to the companies here. Yeah, it's difficult to see. I mean, I do stick to, maybe it's a bit boring to repeat, but it is sometimes from outside seen as kind of like, is it stable? Is it is the government stable? Well, in Kenya certainly it is. But is it? Are all the policies stable? Do we know how much tax we will pay this year? Do we know if that's the same next year? If you can't do those numbers before people generally investors and business owners like to be able to predict what how the next 5 years look like. And I think there steps can be made in terms of being transparent, being predictable and stable in terms of how those policies are implemented.
You mentioned that it's critical for large fund managers and big businesses to be part of this entire conversation. But if you come to Kenya, pretty much you find big companies don't want to get into it, or rather are slow into uptaking it. What would be the reason, and how then would, in terms of government as well, working together with the private sector and other investors in this sector, work together to make it easier, to make it attractive to these big fund managers?
Yeah. Well, I mean, big companies not innovating, that's not only an issue here, that's a worldwide issue, right? I mean, monopolies or people with a dominant market share generally are happy with the money they make and often are not incentivized to keep innovating. I mean, I'm sure there are examples in Kenya you can think of. But that's a global issue. That's everywhere the same. Government has a role there to play, in my view, to make sure these monopolies are either broken up or at least incentivize and make it easier for competition to compete. And so that I think is that's a global issue. Big companies generally don't innovate as much as startups, and this is why I think the government should really focus on giving incentives to startups and and what do startups need? They need money, and how do we get more money? By incentivizing fund managers and asset managers to provide this capital. So that I think is what would be very helpful if there could be improvements made there.
So for folks who put their money into these funds, and I'm assuming that it's made up across board of individuals, groups of people who say, okay, well, here's some money I'm going to put into this thing, and you as the fund managers decide where it goes based on the process. Just as there's no guarantee that the business is going to succeed, there is also no guarantee for the folks who are putting their money in. Are they aware of this going in as they put their money in, that it's possible you could not get a return, or that your money goes into the system and disappears?
Yeah, they should be made aware. I would say in venture capital firms, yes, there are some private individuals who invest. It is generally, we call them, let's say, angel investors maybe, or even family offices. So they are considered sophisticated investors, so they should know. I mean, venture capital, that's another thing to note about venture capital. You can't just invest in a fund and half a year later say, you know what, I'm bored of it, I want my money out.
Right.
You'll have to wait 10 years, right? So funds generally run for 10 years. So it is a long-term game. Which allows for these startups to spend, to use the money for 5-7 years to grow their businesses. So it's high risk. People investing in firms, in funds here, have to be made aware that this is high risk. You might lose your money. That should be part of the regulation and part of, let's say, the communication done by the fund manager.
So you look at Kenya's venture capital and it's maturing rapidly, and just a little bit tweaking, especially with government support, policy changes, it is expected to grow even further. So just in terms of where you sit, how do you look at the situation in terms of venture capital businesses in Kenya and the trajectory it's taking?
So it's definitely growing, and we also, maybe coming back to Boost Africa, so the first program, even though we have completed it, these funds are still looking for more capital and certainly looking for more money, for more companies to invest in. So the program is still active for another 2 or 3 years. But we have already discussed a successor program. So we expect to launch it next year. The European Investment Bank, together with the European Commission, it would be more than double in size. So very good news for Kenya, very good news for Africa and for the entrepreneurs here. And this is, and in addition, just a general market, because of course the Boost Africa and EIB is just a part of the market, that the market, I think, will continue to grow. I think it's unstoppable. There's a huge, the economy, Africa is some of the fastest growing economies in the world. So the opportunities here will only continue to rise. What all we try to do is to grow it faster, because there is a lot of need for more jobs, for more companies to be started and to be successful. But I see a very positive future. It just I'd like to see it go faster.
What would that take for that to happen? Because we're trying to make it go faster. What does faster mean in this case? That businesses are growing faster, or that more people are getting into the pool? How would that work?
Yeah, I think it's probably. I'm sure all these entrepreneurs try to grow as fast as they can. So I'm not sure. I think it's giving more people the chance to start their business.
Okay.
So by making more money available, there'll be more people who will be able to dip into that pool of capital, and the more companies you can start, the more the percentage game is just that there will be more companies successful as well. So by putting more capital to work, I think there's no lack of entrepreneurs in Kenya. There's no lack of great ideas. There's no lack of education or IT skills or any of that. It's all here. But they are not there, as you said in the beginning. 2% of your global venture capital is coming here, and you have a population representing 18% of the world population. So you're really lagging behind in terms of capital. What is coming here, and this is again what Boost Africa tries to change, and this is why we need much more private sector capital, because the public sector cannot do this on its own. You need so much capital to do this, and this is where your big asset managers, the big firms who sit on a lot of money. It would be great if they can also look at their own startups and their own, let's say, that part of the economy where people really are in desperate need of capital.
I just want to look at it from the government perspective, in the sense that if we have more firms that have received these assistance, venture capitalism, and businesses are growing, that translates to more taxes for the government. I could be wrong, and an economy that thrives. So should this be something that then the government jumps on immediately and not wait?
Yes, it's a win-win situation. There is no downside to this. There's no downside in other parts of the world either. I do not see why there would be a downside to Kenya. In Kenya, I think the government. Okay, there's Many things. I mean, the government, of course, has many things to take care of, and it might not be a priority area for them now because there's a lot of other things as well that they need to take care of. But I think it would be a win-win for the government, for the country, for the economy, and for the population, most importantly, for the youth. The program that we have is also very much focused on youth employment, on gender equality. So we're supporting women-led businesses, which is, in Kenya and all over the world, again, parts of Africa, Kenya, all over the world, women are not always playing their full part in the economy. And this is a huge missed opportunity. So again, the Boost Africa program, the Invest in Young Business in Africa program, and the Global Gateway program of the EU are all trying to make a change there as well by really having a gender focus as well. So the more people you can make active in your economy, the more people that can work, the better it is also for the government. More taxes, as you say, and a happier population.
Have you found that there is any kind of hostility, at whatever degree, whatever level, by governments to then pick up on this idea? Because they still do have to create the environment where this relationship can occur. You can't do this where there is a hostile environment, which might be created by government. How do you deal with that? Or is it a place where we say, okay, we're just not going to go into this particular market?
No, I haven't felt any hostility. The government has a lot of things on its plate. So, but also our program, the program we have, of course, is private sector focused.
Yes.
So I didn't go. Well, the government has to approve it. When we invest in a fund, I will get a non-objection from the government.
Okay.
But in general, it's between me and the fund managers, and the fund manager then to the entrepreneur. So there is no government involvement. I think and there is, of course, a framework in place here, but it's not as conducive to venture capital as it could be. Okay. In Africa, for example, many fund managers set up their headquarters in Mauritius. Mauritius is a very conducive environment for fund managers. And if I would be the Kenyan government and if I would have the time, I would think maybe some of the business should come here. Why not? The companies are here, the youth are here, the population is here. You have so much already in favor of Nairobi and Kenya in general as a hub.
Yeah.
Why not take some of part of that pie as well?
Sure. So finally, are there areas that are hot ticket areas, for example, whereby you say, okay, well, if you're going into tech, if you're going into agriculture, if you're going into fast-moving consumer goods, those will be the ones whereby folks will be looking for you, essentially, to invest in your business. Do you find that this happens here as well?
Yeah, as I said, I think all sectors are. The program has a focus on digital the connectivity, on climate solutions, fintechs, healthcare, education. So the program is quite wide, and the best opportunities could come from anywhere. Even as Dennis said, from manufacturing, which is maybe an old-fashioned type of sector. And Kenya is trying to make indents in the manufacturing sector, and we've seen some success stories there as well. So, as I said earlier, we really leave it up to the local fund managers. The people based here in Nairobi, they're Kenyans. They know the market. They've grown up here. They have the networks. They know everybody. And it's up to them to try and find the best opportunities. I'm not going to sit here and